Hi everyone, welcome back to the podcast. This is Vinod here. Happy Saturday. I hope you have a wonderful weekend ahead, and I'm sure a lot of you are getting ready for your Diwali rounds of shopping, and Diwali is getting closer and closer. When is Diwali, Kartik? Sunday?
Sunday.
People know there's a Kartik standing behind me. There's actually two Kartiks. There's Kuti Kartik and Loverboy Kartik. Today we have Loverboy Kartik because Kuti Kartik's not at work for this week, so he's taken the week off. All the videos recording today, my videos especially, is all being done by my Loverboy. So what? Sunday is Diwali, is it? So early wishes. So we still have a week away. Anyway, I hope you guys have managed to get all your stuff together and managed to buy all your things. People who are traveling, travel safe, be well, take care, make sure you pack well and don't forget anything. And people who are staying in Chennai, do be safe. So what are we going to talk about? I put up a LinkedIn post, which I hope some of you managed to read, which is about conspiracy theories and how that reflects on economic behavior. We always hear about conspiracy theories, especially we see it on the internet, and we laugh when we meet people who believe in conspiracy theories. But the funny thing is, all of us are prey to it, and we all fall for conspiracy theories. It's just the way that the conspiracy theory needs to be packaged. If it's packaged well enough, it can fool even the smartest person. And very famously, Anand's example will always be even Isaac Newton invested in the tulip bubble, and for all his brilliance, lost a lot of money in the tulip bubble. So you can be rest assured, conspiracy theory has got nothing to do with your level of intelligence. It's about a social construct and human behavior pattern. And since we're all humans and we're all social beings, we can fall victim to it. So I thought we'll talk a little bit about conspiracy theories and economic behavior in the broader sense, instead of diving into individuals, because I already spoke about cognitive dissonance yesterday, and I don't want to repeat too much of a topic from yesterday to today, and I thought I'll take a broader stroke at this one. And finally, I'll talk about some historical examples of how this kind of conspiracy theories evolved just when natural market cycles happen, and these conspiracy theories are still alive and well, and some of them are new ones which are just coming up now with the latest sets of market movements which are happening. Broadly speaking, market movements are like the weather. Yes, human beings do try to control, like how we try to control the weather. We believe we control the weather. But market cycles are quite a natural phenomenon in the sense that demand and supply have its own cycle, and we try through interest rates and other means and methods to control growth much as we can. And it usually leads to disastrous outcomes when we try and control this too much. This is what Anand spoke about in a video, especially in the banking. When we lowered interest rates to the bottommost and kept it at zero, banking industry took a major hit because they were unable to generate income. Investors were banging on the doors of bankers, demanding better returns for their investment. And bankers had to get creative, and we got all kinds of creative products, which led to what finally was the accumulation of the 2007-2008 financial crisis. Those of you who missed that one, I suggest you go catch that video. And Anand talks very nicely in depth on how banking, though it's looked upon as something evil, it's a necessary thing in society, having credit cycles. But when it's being forced into a corner and made to behave in a way which is unnatural for the bankers, you kind of get what we got, lopsided markets. And finally, it led to the crash of 2007-2008. And the same thing is what's happening to this current cycle of crisis, where the Fed is trying to avoid this by raising interest rates and trying to keep it at natural levels, where inflation stays natural and interest rates stays natural. Where we do have economic growth at the same time, it's at a pace which is reasonable and as expected. Hang on, I got Shashwat calling me.
Yeah.
Guess Shashwat will be joining me for the video today, as you guys overheard. Of course, this would have been yesterday's video, Be Rich, which you have seen me with Shashwat, because I recorded the podcast also yesterday. So I hope you enjoyed Shashwat's video with me yesterday. I have some interesting things to talk to him about, and I hope you had approved it. Anyway, getting back to this whole conspiracy theory and how it affects market and market cycles is what I wanted to talk about today. And the reason why I want to talk about it is because it influences our individual financial behavior. And I am sorry, last couple of days I have a tendency of talking fast. So this is my natural speed which I talk at. I did read some of the comments. I should try and slow down. And I will try and slow down and keep that in mind when I'm talking. And I will ask Arun when he's editing it to slow the speed down a little bit, tad bit, so I don't seem like I'm whirling away really fast and leaving you guys wondering what Vinod is talking about. So conspiracy theories do influence our financial behavior, like how it influences all other behavior. So particularly in stock market participation, you can see this. And there's lots of studies which had come out about this. And this leads to lower propensity of people participating in stock market because people believe and they endorse these conspiracy theories and they think market is controlled by a select group of people. They have a secret hand and they're controlling the market and things are happening and on their wish and whim. And, like FIS come and dump money into India. They pump up the Indian market and then they suck out the money by selling rapidly and they take profit out of India. They're carving out money out of India like the colonialists did, like how the British Raj did during the colonial period in India, taking trillions of dollars out of India. There's a conspiracy theory out there that the FIS are doing the same thing, but in a legal route. They pump up the Indian stock, pump up all these short, small cap companies. Then Indian retailers go participate in this market. Then as soon as it looks ripe for picking, the FIS dump everything and they take their money and they run. I wish it was so. Then it will explain a lot of things, but it's not so. FIIs are very important to the Indian market, and them participating in this market is crucial for India's growth because it increases the credit capital and allows businesses in India to have access to money, to build factories, to create jobs, to create wealth in India. These market fluctuations are very natural and they lead to a whole set of macroeconomic conditions which play to FIIs. FIIs invest in India to make money. It is a foolish idea to think FIIs are here to pump and dump stocks in India to suck out Indian wealth. So this kind of theory being widely spoken in social media and other platforms by people leads to low propensity of people participating in stock market because they believe it is rigged. Like how a lot of people believe the India-Sri Lankan game was so lopsided the other day. I had a few friends of mine on Twitter reaching out saying, do you think the match was fixed? I strongly don't believe the match was fixed. It's just that Sri Lanka is going through a tough phase right now and it's reflecting on their sports. I don't think the match was fixed. I don't think any Sri Lankan player would ever right now take money and throw the game away, especially when the nation needs something, anything, any glimmer of hope. But the conspiracy theories are there because in the past, some few odd players, bad apples were there. Now it's set into an example that any match looks lopsided or any player looks like he's underperforming. Immediately, there must be some fixing going on. See, this is a conspiracy theory. This is what happens. And this is also true in the stock market. So how do we recreate this social trust? How do we fix this problem? How do we fix this perception? The only way to fix this perception and this problem which we have is by encouraging more and more people to participate. This is like the famous saying, which Buddha told a story about. In a cave in the darkness, there's a rope. And when you don't have enough light, when you see that shadow of the rope, you imagine it to be a snake. So immediately, as soon as you bring light into that cave and you're able to see what it is, and you see it is a rope, then you'll be like, there's nothing to be scared of. It was only a rope. It was just my imagination. Most conspiracy theories are like this. Because of lack of information and lack of clarity, we imagine it to believe it to be something it is not. And that's the same is true with stock market. Most people do not know about stock markets. They do not have the time or inclination to read and find out the information. They rely on social media. They rely on WhatsApp forwards and they rely on all kinds of information being forwarded to them. And based on that, they see this and they are quick to judge. So the only way we can get rid of this is encouraging more people to read, encouraging more people to participate in the stock market, and showing them that this is one of the best avenues of creating wealth. As I said, this is a tall order and it's a tough thing to do. That is one of the premise of me talking on these videos, or even Anand is out there talking in Be Rich and Think Rich initiative of his, is just to educate people there are options out there. So this is what the critical thing of even Anand creating Think Rich initiative and all these platforms is this, to educate people. Because if we want to improve our society, if we want to move forward as a society, it is through education and it is through sharing knowledge and shedding light in all these dark areas in our society. So we have taken upon this effort to talk about economy and talk about wealth creation and how everyone and anyone can create wealth by creating value and finding value and buying value. And we do believe it is possible, that there are many Warren Buffetts in India who can be created by the sheer number of our population if we just dispel all these conspiracy theories around our stock market and our economy. As I was saying in the beginning, I said I'll share some examples. These are some of the famous examples of conspiracy theories related to stock market. During the Great Depression in 1930s, various conspiracy theories emerged, often blaming specific groups or institutions for the economic downturn. The belief was they could have influenced individual financial decisions, such as hoarding cash and distrust of banks and avoid of investments. This was specifically labeled on one specific community, and we saw it play out what happened on World War II in Europe. And that same conspiracy theory, I don't want to mention specific groups in society because, again, it fuels these conspiracy theories. But that specific group and society, even till date, are still labeled and they're blamed for any kind of financial malpractice. And it's not true. The Great Depression was created because of various other reasons. It wasn't because of a secret group sitting behind, manipulating the stock market and hoarding cash and making sure everybody lost. When any kind of disaster like this happens, people like to find someone to blame. And the easiest person to blame is a minority. And we've seen this also play out in India. Even during the tulip bubble, the famous example, speculative bubble, there was conspiracy theories and rumors in a role of an extreme price fluctuation in tulip. People believed that these theories might have made by irrational financizations or was based on unfounded fears. But this was also not true. They thought a bunch of guys were sitting in the royal courts, pumping and dumping this. It wasn't true. It's just a whole bunch of people, human beings, believed there to be something when there was not anything. And they went chasing it, finally to find out there was nothing there. This has happened historically over and over again. And the last one which I want to talk about is the 2008 financial crisis. Some individuals still believe that the government and some specific banks and institutions acted alone and created this whole financial 2008 crisis and made the economy of the world collapse for their own personal gains. The most famous narratives are always based on this, that there's a secret cabal or a secret institution sitting behind all these great movements in the market. And it's not true. It's like blaming hurricanes and cyclones on a secret sect sitting somewhere, creating cyclones and hurricanes and throwing them out into the world. I'm sure when I just say that, there's a small group of human beings sitting somewhere under some rock who actually believe this, because there are people who actually believe the world is still flat. So anything is possible, I guess. But I wish that we would, as a society, move further away from these kinds of conspiracy theories and start educating ourselves and doing a lot more research and understanding this. Thanks for watching the podcast today and listening to it. Wherever you are, do stay safe and do have a wonderful week ahead and a weekend. Today being Saturday, do enjoy yourselves, but please be safe. Thank you, and we'll see you in the next one tomorrow. Bye.